Hey traders, Raghee here, and just to kind of kick off the week, and in light of the kind of price action that we're seeing, I just want to reiterate a couple ideas. Number one, prioritizing weakness. If you're thinking about weakness in a particular area, in this case, say equities, prioritize the weakness. I like the weakness in the Russell the most, hence we are short currently this market. Next, the NAS, hence we are also currently short. The weaker the NAS remains below 7,000, the more I start to get bearish on the ES, and then eventually, and not quite yet, the Dow. In the meanwhile, we look for opportunities to play weakness in intraday opportunities to play weakness on the 1 minute chart. And this is something we continue to look for, opportunities to play the downside when we are seeing different types of levels of resistance and different types of expected price movement range, which is more like a cyclical or more historical look at typical price movement range. And it's kind of tough to play some of those, especially from aggressive levels, because a lot of times we could be very right on direction, but the uncertainty of how much wiggle room to give a market before the stop loss is always pretty tricky. But look, you don't have to play this end of day with QQQ, SPY, IWM, DIA. You can play options, and you can play the options on the futures contracts as well. Because when you talk about increased volatility, positioning yourself in the market against a stop loss in a higher or more unpredictable volatility environment becomes very troublesome as far as how far away should your stop loss be. Well, when you use an option, it's a whole lot easier. But, aside from that, I want to spend a few minutes talking about why I remain really bearish, because it's tough. A lot of people don't want to accept this. I could be wrong. I always think about the fact that I could be wrong. But for right now, considering we just shorted a zone between 7150 and 7200 on the QQQ, I don't think I am, right? I think for now, the trades are proving that bounces, what we call selling into the rip, selling into the rally. If you hear sell the rip, rips are sharp moves higher. Now that is going to be as valid, sell the rip is going to be as valid as the old buy the dip was at various stages of the uptrend. It's the same philosophy, just the other side of the same coin, okay? So sell the rip will continue to be NAS and Russell friendly. Now, why am I bearish? And this is something we started talking about back in July, August, September. There are certain cycles in the market. In the first place that this really started to play out, and by the way, I will continue to monitor these markets. We want to monitor them, make sure that the narrative is still in place. And one of the first places that we were looking at was the emerging markets, the EEM, which is very China heavy. Then we started looking at things like Argentina. We were looking at places like Greece and Turkey. These are where the overall weakness really starts to kick in, crossing the 200 EMA, printing predominantly red grab candles, those visual cues from these free tools that I share with you all and talk about quite often. And every one of these tools is free, gang. Every single one of these tools. They're free. They're free either on the TOS platform, they're free on the TradeStation platform, they're free on the TradingView platform, every single one of them. And some of them that are more generic, like the MACD, the slow stochastic, the volume weighted average price, those are just built into a lot of these platforms, which, some of you may or may not know. So now you know. So EEM, the currencies, right? The euro, the pound, the Australian dollar, the New Zealand dollar, the Chinese yuan, all these also getting weaker, rolling over. All the while, the dollar index has been, to varying degrees, shot out of a cannon, heading higher and higher and higher. Emerging markets weakness, emerging market weakness currencies, and then dollar strength, right? And then also, what else accompanies that? Peak yields, peak bond yields. In other words, we're not making new lower lows in bonds anymore. Certainly not on the shorter end of the yield curve, right? That's another sign. We're testing those, but we're not making lower lows. Another sign of the process that is a market top. High-flying high beta names, high flying stock, Netflix, Amazon, they start to roll over, okay? That's another sign. So those high flyers, FANGs in this case, start to roll over. You start to see a market sell-off, rotation into utilities, staples, real estate, healthcare to a certain degree. You start to see that specific type of sector rotation. I'm telling you this from 3, 4, 5 go-rounds with these types of tops, gang. And then, I will say, kind of aside of the obvious rollover in equities, what you'll also see is kind of finally, it's very often the final domino to fall. And this is for those of you that are watching this video and are members, you guys have heard me talk about this ad nauseum, this same exact process, right? The last one that usually goes is crude oil. And I just have to reiterate, when we were getting that rally based upon the optimism of maybe the U.S.-China relationship getting better, a ceasefire in the trade war, we had a huge rip before the midterm election, rip higher, right? In the equities markets, and crude oil not only did not participate, it headed lower to the 200 EMA. This was the final domino, gang. Now, whether you believe in this process or not, it is time tested. That's okay. Just remember, we will see rips, bounces in a downtrend, just like we saw pullbacks in an uptrend. So there's a little something here for everybody. But the path of least resistance, and the path that I think we're probably going to follow, is going to be generally lower. Now, we could see the Santa rally kick in from basically the 3rd week of November into the new year. That is not an uncommon market seasonal when you look at a 5-year composite. But if all we can hang our hat on is the fact that this is what it always does, and if that's the only argument you hear out there, boy, this is somewhere where the bulls are in a lot of trouble. So this is where I'm saying, my bears out there, or even my bulls, get selective. We've been talking about how to get selectively bullish, where to get selectively bullish, and we'll continue to be proactive about this approach for the coming days, weeks, and months. So think about this process, prove it to yourself, take a look at those charts that I've mentioned, and I'm doing this to show you how to navigate not only this potential downturn, but any others in your career, my friends. I'll see you in the next update.